Hello everyone, welcome back to another video on the channel. We have news coming out from FTX that the SEC is warning them against paying creditors back in stablecoins. And so, the US court orders here, a couple of months ago, agreed to pay back $12.7 billion to customers with the FTX collapse about 2 years ago. And so, we do have some fear in the market right now. We have a fear and greed index here of 26, which is creating a lot of uncertainty of where Bitcoin and the cryptocurrency markets are heading. And so we're going to be discussing that in this video. If you enjoy this type of content, make sure to hit the like button and subscribe for future videos. And so let's go ahead and take a look at some information here that was just received by the SEC regarding the FTX collapse. And so we can see here, the debtors are exploring different distribution options, including potentially distributing stablecoins to certain creditors. And so the plan for repayment for the FTX collapse here was to pay out in stablecoins, paying out the $12.7 billion. However, the SEC is now warning them against that. And so we can see here, in addition, the debtors have not identified the distribution agent which may potentially distribute stablecoins to creditors under the plan. The SEC is not opining to the legality under federal security laws of the transactions outlined in the plan and reserves its right to challenge transactions involving crypto assets. And so let's go ahead and take a look down here. We can see that the SEC has requested that debtors delete the discharge provision from the plan, and proposed confirmation order also has asked the debtors to make certain other changes to the plan and proposed confirmation order. And so they're asking that they actually change what they're talking about, and they are warning them against paying out in stablecoins. And so I'm going to be explaining what impact that will have on the markets. And so let's go ahead and take a look at the Bitcoin chart here. We can see Bitcoin currently trading at $57,600. Now it did drop down quite a bit today. We were right around $65,000 just last week. Now trading $57,000. We can see here that we did rise up to that resistance line and get rejected, and now we are falling back. And so we could be finding support down here right around $52,000, and thus this turns into be a black swan event. And so if interested, there is a link underneath the video to Margex if you're interested in longing or shorting the market. Also, right now, just by signing up using the link underneath the video and trading on the platform, you can earn up to $5,000 of the Caspa airdrop, and so I definitely recommend checking that out. And so as I mentioned, there is a US court order out there to pay back $12.7 billion. Now, the SEC is maybe warning against paying out in stablecoins for a couple of reasons. Now, the first one here could be that there is a bill out there that is called the Clarity for Payment Stablecoins Act of 2023 that could be passed by the end of the year. And so maybe they're familiar with what exactly is going to happen with this bill here. Maybe they're warning against paying out in stablecoins because they know what is coming, right? And so this could be a case for that. Maybe they're looking out for the creditors. If they're going to be paying out, they'd rather have them pay out in fiat currency rather than Tether or another stablecoin that could potentially have a collapse depending on what is passed in this bill. And so in addition to that, let's also go ahead and take a look at the FTX holdings. Now this is outdated a little bit here. We can see this was filed on 9/11/2023, and so this is about 1 year old here. However, we can see that their top digital asset holdings here were Solana, Bitcoin, and Ethereum. However, now they may have sold off a lot of these cryptocurrencies, but they could potentially be holding this in USDT. Right, we can already see they had $120 million of USDT here at the time of this report. However, if all of these were sold here, we could see that they're holding almost $3.4 billion of USDT. Now, it could be more than that, right? Maybe they did not already convert over to fiat currency. And so if they're making that conversion over to USDT, that may cause Tether to start having to liquidate some of their positions. And so let's go ahead and take a look at a report here from July 31st for Tether. Now, this shows where they're holding their cash, right? I mean, this is one of the largest stablecoins out there. At the time of this report here, they were stating that they had $118 billion. And so we can see here that $110 million were held in cash and bank deposits. Now, if they're being asked to possibly liquidate $3.4 billion of Tether, that is going to cause them to start selling some of these bills that they're holding, right? I mean, this, if it's not backed one-to-one, we could see a collapse of Tether. Now, that is a possibility. That could be a big black swan event, especially with the bill being passed here by the end of the year as well. I think that's something to be paying attention to. Now, in the report on July 31st, they are showing here that they hold a lot in U.S. Treasury bills, about $80 billion worth out of their $118 billion. And so if this is true here, they should have no problem liquidating that and paying that out, but I think this is something to be paying attention to. Let's go ahead and take a look at the Bitcoin balances for whale addresses. In the last 24 hours here, we can see these have been going up significantly. And so we can see just here on August 30th, we can see that reached a new all-time high. Now the price is not jumping up, however, we're continuing to see more and more whale addresses holding Bitcoin. And so I think this is something that's very positive, it's very bullish. Institutions are continuing to accumulate Bitcoin. However, retail is becoming very fearful. And so as we can see here, right, the crypto fear and greed index is at 26. And so retail is fearful. They are selling their cryptocurrencies. Institutions are continuing to buy more and more cryptocurrencies, including BlackRock. And I definitely think that a lot of this is happening. They know the limited supply of Bitcoin out there. And so if they can continue to accumulate and buy more Bitcoin while there is fear in the markets, that is their best opportunity. And so if you enjoyed this video, make sure to hit the like button and subscribe for future videos. Also, make sure to check out the link underneath the video to Margex, where you can get your free cast by airdrop. Thanks so much for watching. I hope to see you in the next video.